Inflation can occur when central banks print too much money during times of panic. Throughout history, no nation has remained on top forever. Every country eventually reaches its peak and then declines, usually within 100 to 200 years. Unfortunately, people often fail to learn from history. We had a recent president who didn't know history and thought he was smarter than it. But the truth is that no nation or currency has ever stayed on top forever. America is now the largest debtor nation in the world, with troops stationed in over 100 countries. Some people believe that we are overextended financially, economically, and militarily. It's important to learn from history so that we don't repeat past mistakes. In this video, we'll be discussing the investment recommendations made by Jim Rogers, a highly successful investor and financial analyst. With a net worth of $300 million, Rogers is the chairman and co-founder of Soros Fund Management and the Quantum Fund, both of which he launched with George Soros. Stay tuned, as these two assets have the potential to positively impact your finances in the long run. That is why on InvestWise, we provide you with all of the information you need to be on time with your investments. If you find it useful, please consider hitting the like button and subscribing. Being young in America these days can be quite daunting, as the future looks bleak. The government is borrowing and spending money like there's no tomorrow. While this may benefit the elderly like me in the short term, it doesn't bode well for the future. 100 years ago, Britain was the most powerful and prosperous country in the world, but within 50 years they were bankrupt and needed a bailout from the IMF. It goes to show that no country, no matter how strong or wealthy, is immune to economic decline. Currently, America is the most indebted nation in history, according to the Bureau of Economic Analysis. As of the end of 2020, Americans owed the rest of the world $14 trillion more than the rest of the world owed America. This is a worrying trend, as it shows that the country is living beyond its means and borrowing heavily to sustain its lifestyle. Furthermore, printing more money is a significant contributor to inflation. The government's decision to print more money leads to an increase in the money supply, which in turn leads to a decrease in the value of money. The symptoms of inflation, such as rising prices and lower purchasing power, are already evident. It's worth noting that financial history has shown that money printing eventually leads to economic problems. Although the current situation might not result in immediate issues, it's only a matter of time before the consequences manifest. Additionally, while it's easy to buy financial assets online with a lot of money floating around, this trend won't last forever. Historically, such trends tend to have an expiration date. It's vital for young people to recognize these trends and be proactive in planning for their financial future. Rather than being complacent, it's essential to learn from history and take steps to mitigate the risks associated with the current economic climate. The world's economy is facing significant challenges, and it's evident that many assets are becoming increasingly overvalued. Property and stocks have seen considerable gains, while the only things remaining cheap are real assets like silver, wheat, and sugar. These commodities have seen significant declines from their all-time highs, with silver and sugar both down 70%. Inflation is a significant concern that occurs when the money supply increases faster than the national economy. Janet Yellen, the 15th chair of the Federal Reserve, acknowledged that inflation is a significant worry for Americans. She oversaw a problem that aimed to sell mortgage and treasury bonds that the Federal Reserve had bought to stimulate the economy. The global financial crisis of 2008 was a result of too much debt, and since then, global debt levels have continued to skyrocket. As a result, the next economic downturn is expected to be even more severe than the 2008 crisis. It's essential to acknowledge the looming threat of hyperinflation, as it's a real possibility if the government continues to print more money to manage the increasing debt. Britain's experience offers some insight into the consequences of excessive debt. Although it didn't experience hyperinflation like Venezuela, the value of its currency declined significantly against the US dollar. The decline was gradual, but it resulted in a decline in the standard of living and the value of the currency. Zimbabwe, one of the richest countries in the British Empire, is a prime example of how excessive debt and mismanagement can lead to hyperinflation and economic collapse. While it's unlikely that the US will experience hyperinflation anytime soon, it's crucial to take steps to mitigate the risks of serious inflation, a decline in the standard of living and the value of the currency. History has shown that these events are likely to occur if the government continues to print more money to manage the national debt. Therefore, it's essential to take a proactive approach to planning for the future. Investing in real assets and learning from past financial crises to avoid repeating the same mistakes. Due to a housing bubble caused by easy access to credit, the global economy collapsed in 2008. Many individuals lost their houses and their jobs during the Great Recession because of the bank's billions of dollars in worthless investments in subprime mortgages. In 2022, the US dollar has increased by over 10% compared to other major currencies, reaching levels not seen since 2002. However, if the Federal Reserve changes its aggressive rate hike agenda, the dollar's value could decline. The British pound has gone down 80% against the value of the US dollar, indicating that having a currency tied to one country can have negative consequences. It's essential to recognize that even if you're permanently employed, economic downturns can still impact your life. While higher salaries may offset anticipated inflation in the short term, the natural unemployment rate can eventually revert those gains. However, there are always individuals who come out of economic crises better off than before. Investing in real assets like gold and silver is a smart way to mitigate the risks associated with economic downturns. Both commodities are likely to skyrocket in value during a financial crisis, offering a degree of financial security. While some financial experts may dismiss investing in gold and silver, it's crucial to recognize that these commodities have been valuable for centuries and can provide stability during times of economic uncertainty. Commodity indexes are also worth considering since commodities tend to increase in value during inflation. Owning rice and agricultural commodities, among others, through an index can offer exposure to a variety of commodities, hedging against inflation and offering potential gains during a financial crisis. Bonds are currently experiencing a bubble all over the world, and as such, investors should exercise caution when considering them for their portfolio. The 1930s were a difficult time for many Americans due to the stock market crashes, but some investors still managed to make profits through smart investments in inflation-proof assets like commodities and real estate. Commodities like gold and silver tend to be priced with inflation, making them a suitable addition to a portfolio that seeks to protect against inflation. When inflation is accelerating, commodity prices typically rise, while stocks and bonds tend to perform better when inflation rates decrease. Real estate can also be a smart investment during times of inflation, since rents are likely to increase in line with real estate inflation, boosting property owners' cash flow. Investors like Carl Icahn have successfully navigated economic downturns by being bold, flexible, and adaptive. Icahn follows a value investment philosophy and invests in businesses that are undervalued by the market. Learning from the successes and failures of other investors can help you make informed investment decisions. To become a successful value investor like Carl Icahn, it's essential to stay informed about the market, learn from others' experiences, and be willing to take calculated risks. Investing in safe assets can help you build wealth and avoid worrying about losing money to life's little expenses. No country can remain on top forever, but by learning from history and making informed investment decisions, we can all benefit from the successes of our predecessors and grow rich, strong, and prosperous. If you love this video, subscribe, leave a like, and watch this one too.